this is the formula to be consistent and profitable. Those numbers, they are like so top secret and nobody ever thought about putting this into his mouth. That's why Last hour of the day, 55 minutes. So we're gonna take a long position. We're gonna enter here. Our stop will be 2 ticks below the DR. The minimum target would be here. Let's make the following. Target is this one, and we take partials at DR levels. Partial of 50% over here. So retirement setup for me, that's something I will trade any given day, no matter what is price telling me before. But like, this is a chance. The chance is below 15% that we will close below the DR levels. So this is a trade I'm taking with 85% probability. On top of it, there are statistics. We will talk about this later. The percentage of the close above the DR at the end of the day is around 70%. What I know based on statistics right now is I have a retirement setup. I have 1 hour to the close. So I have a 70% probability that price will close above the DR levels. That's just math, 12 years of data. I'm not gonna question that. I fall in line with it, and that's also one reason I take this trade, because I know there is a high probability that we will close above this level, and there is a very low probability that we will close here. So you can't get it better. So this is a no-brainer trade. This is a trade you just take, and you will see how it works. So price comes up again. Okay, so we take a partial over here, so that's 50%. That would be, let's make it 2. I was rounding down, so we secure 2. Our stop goes on entry. And the other half of the position will go back to where it was. So session is already over, so I'm just gonna kill the trade here. So we close the trade, and that's it for us. I'm only placing trades if I know the probability is in my favor. I'm like the bank in the casino. The casino in roulette knows that player can win on the table, but they know they have a statistical edge which gives them the long-term profitability, because there are 2 numbers. They're like red numbers, there are black numbers, and there are 2 green numbers. So that's the simple thing which takes the statistics into the favor of the casino bank. So anyway, like, they have a statistical edge which is like slightly above 50% because of the 2 green numbers in roulette. But that makes them profitable over the long term. I'm so confident in my system because I know the numbers. These numbers are not even, there is no question about it. That's 12 years of ES data. So I know that price closing below this level is less probability than 15%. And that's huge. That's just like such an edge for you when you're trading. When you know you have the confirmation to the upside, a close below this level happens only 15 times out of 100 times. And then the other statistic I told you, 70% that we will close above or going above the DR level, 70%. I mean, these are numbers which are normally, like when we talk about casino, every casino would dream about these numbers. So that's why I'm so confident. I know it from work because I know how everything is programmed. I also know the data. I know the data which I gave to you. I know that you have such a statistical edge. So, and that's the nice thing on DR. And that's why there is no other system which will give you that confidence and the probability. There will be days where you will be losing. That's not a problem. But this is just something which helps you as a trader so much. First of all, you're not trading into the wrong direction. Second of all, you have the probability stacked in your favor. And that's how you want to trade. Everything else, it's B. It's just doesn't make sense. So IDR session, once you have a confirmation probability that price will close above the DR, either to the upside or to the downside, whatever your confirmation is around 70%. That's just I'm just giving you a huge gem over there. Because this is the formula to be consistent and profitable. Because those numbers, they're like so top secret, and nobody ever thought about putting this into his mouth. giving you 70% probability once you have a confirmation and you know that price will come back to DR levels. That's why I love the retirement setup so much. That's just what it is. If S&P is the same like SPX 500. So first of all, there's only two things you look at when you do your decision if you want to trade or to enter a trade. First of all, when you have the regular session, the mothership is the S&P 500 index. On TradingView, that's SPX. The future is the ES. So no matter what are you trading, it doesn't matter if you do a funded account, it doesn't matter if you do CFDs, it doesn't matter if you trade micros, you base yourself and your trade decision is based on the SPX chart or the ES. And once you have a signal in this chart, you just go to whatever broker you're using, whatever CFD you're using, whatever funded account. When this signal is coming you just enter it. You look at your chart because the chart will look the same from the structure like this one. And then you just enter the trade and you place your stop based on your CFD. But the decision making for trade entry should be only happening on the real ES chart or the SPX chart when you trade the regular session. Nothing else. Please invest this whatever. I don't know how much TradingView costs per month. $10. I have no clue. And $3 for the real-time data. That's the minimum if you have to invest. If you want to become a successful trader, stop looking at whatever we have there, like some CFD data feeds which are not the real one. Look at this data feed, ES or the SPX up here. That's the only thing you're looking at. And then you take your trades in your instrument, whatever you're using. If you're using ETF, it doesn't matter. CFD, it doesn't matter. Look at this chart, see this, you go long, and then you switch to your broker chart and you take an entry there and you put the stop based on the low which the CFD broker, for example, has.